Today, I want to run you through some recent trades that I've taken and show you exactly how I was able to achieve a 13% return last month. What is going on, guys? My name's Thomas. I'm a currency trader, and today I want to discuss exactly how I was able to achieve a 13% return for the month on my personal trading account, exactly how I entered into the markets, show you through some of the trades that I took, and show you how I was able to minimize my risk while doing so. Alrighty, guys, so a bit of a summary on my last month. So I took 13 trades in total for the month. I had 9 winners and 4 losers with an average win ratio of 69%. I took 7.38 R for the month, which ended up in a total return of 12.97%. Now, my biggest winner, which is one trade that I'll run you through today, was 4.68%, and my biggest loser for the month was only 0.95% of my trading account. Now, the way that I was able to achieve such a great return this month, and you can really clearly see it when I run you through some numbers later, was through risk management. Now, risk management is so important when it comes to trading. Being able to maximize your winners and keep your losses to a minimum will make or break a trading system. Now, I actively manage my positions, and I'll show you exactly how I entered into markets and how I actively manage those positions. And when you look at the statistics between not managing and actively managing your system and your trading, there is such a big discrepancy between not only the amount of money that you can make from your system, but also your maximum drawdown or how much you may potentially lose at any given time. Now, in regards to what I actually do trade, I'm a Forex trader. I have 15 pairs within my portfolio that I trade, and I trade what's called daily biases. So basically I trade on the daily looking for confirmation or biases within the market, and then I drop down to the hourly chart to look for my entries, stops, and targets. Now, I like to keep my trading very simple. I don't really use any indicators whatsoever. It's mainly just based on general price action. Now, the reason I trade this way is because I do work full time, and I wanted to make sure that I could supplement my work with my trading. So basically all I need to do with my trading is look at the charts when the day is closed, which in my time frame is 7 a.m. in the morning. I'll look at the chart, see what the daily closed as, and if there's a trading opportunity available, drop down to the hourly to see if I can get involved. If not, move on to the next pair. So really in the mornings, I'll probably spend a good 15 to 20 minutes on going through the different pairs in my portfolio and seeing if there is any trading opportunities available. And then I might look at my charts around lunchtime for 10-15 minutes, and then again in the afternoon and evening for 10 to 15 minutes. So I really don't spend much time actually physically looking at the charts. However, like I mentioned before, I do actively manage positions once I am involved. Now, if I am in a trade, I will try to use alerts to help to notify me if anything significant was to happen on that trade. But otherwise, I'll probably spend the maximum of 45 minutes to an hour actually looking at the charts every day. And now, I am a swing trader as well. I don't day trade, I am a swing trader, and I typically hold my positions from anywhere from a couple of hours to a couple of days. And if you look at the last month, I only took 14 trades for the month. So, I'm only taking 2 to 3, potentially 4 trades a week. I will go weeks without even taking a single trade at all. And the reason I trade this way is that it really does help to supplement with my 9 to 5 job. Alright, so that's enough of me speaking. Let's jump onto the charts, and I'll show you exactly some of the trades I've recently been taking, how I got involved, and exactly how my strategy works. Alrighty, guys, so just to start with, I'm going to take you over to my trading journal and just show you and prove that I did actually return 12.97% for the month. So I use EdgeWonk as my trading journal. Highly recommend you look into using this, or definitely find a journal to use. But let's just go down to my monthly reports. I started the year with a $10,000 account on my personal account. You can see here up to $13,000 so far, so just over 30% for the year. Let's go into August, where we can see here 13 trades with a return of 12.98%, 69% win ratio. So if you go into those trades for the month, if you go in here, you can see I had 9 winning trades in a row, followed by 4 losing trades in a row to end out the month. So the first trade I want to take you into is one on the Euro Pound, and this is one of my larger winners for the week. The reason why I want to show you this trade is a lot of the trades that I do take don't actually go to the full target that I typically would have outlined from the start. And the reason being is because I trail and I manage my positions. So managing positions can really make or break a system. If I look at this system that we're looking at today, which I trade which is engulfing candles. So let's just run through the system first, and I'll show you exactly what managing this particular position can actually do to the profitability of that system. So to start with, I trade engulfing candles, bullish and bearish engulfies on the daily time frame. So basically what an engulfing candle is it engulfs the candle before. It's pretty much the simplest way to do it. So the rules to be able to trade this and how I define an engulfing candle is that for a bullish, which is the example we've got here, is that the low of the candle needs to be lower than the low of the previous day's candle. So let's look at this example. This is the engulfing candle here, the big green candle in front of us, and you can see the low is definitely lower than the low of the previous day candle. And on top of this, the close of the engulfing candle must be higher than the high of the previous day candle. So rather than the high, it needs to be the close of that candle. So it needs to close above, which you can see here it does, the high of the previous day candle. So this here is a valid engulfing candle in my eyes. I also have different indicators and alerts and whatnot I can use to show engulfing candles. Like you can see this one down here, once they close out, you can actually, it basically just notifies me straight away that there is an engulfing in there, and this is the one that we took the trade on. So engulfing candle on the daily. Target. So my target is this swing point up here. So we've got this shooting star up at structure, and this is where I'll be looking for placement of my targets. In regards to my entry and my stops, we'll drop down now to the 1 hour chart and see exactly where I can get entered. Alrighty, so now on the 1 hour chart. So my entry point was at the high of this candle here at 84.28.5. And the reason being, I look for what I call naked levels. So a naked level is defined as a level which has been broken out of and has not been retested. So you can see here, price has broken through on the next day, and price has not come back to retest the high of that candle. So this is defined as a naked level. So this would be a naked level here at 84.285. This is also a naked level here at 84.230. So they're both naked levels, and the reason I take the higher of the two is because I want to get entered into price. I want price to enter me at the first of those levels. So let's just go through and see what price did. So if we scroll through a couple of candles, you can see, boom, we were entered right here. So for my stop was placed below the low of that engulfing candle. So if we go back out to the daily, you'll see where my stop is here, the red box, and it's below the low by 1 pip of that bullish engulfing candle. And you can see here my indicator working, showing me that engulfing candle. Now I've passed through a day. But let's go back down to the charts. So you can see we're entered here at 7 p.m. on the 18th of August. And if we just scroll through and see what happens, price continued to increase and went on and hit targets. So this was a 1.52 winner. I trade this strategy with 2% risk. So this was just over a 3% win for this particular pair and this particular trade that I took. And the reason I wanted to show you this one is, this one I actively managed. However, like I said, a lot of my trades actually don't go to my full target. A lot of the times my trail stop will be hit before my original target is hit. And the reason behind this is because I typically, once price will move through certain levels, I'll look to tightly trail my stops behind where price action is. And I'll just show you exactly on these charts exactly what I mean by this. So if we look here, basically the way I'll trail my stops is, you can see prior to our entrance, price made a high at this level here. So let's just put a little line on here. This is the high where price made a high on the engulfing candle the day before. Oh, let's just get that lined up correctly. Boom. Alrighty, so basically what I'll be looking for is price to close through this level. So if price closes through the structure level, then I'll be looking to move my stops below the low of the candle that breaks through this level. So as price moved on, you can see we just missed it. Then we tested it. So we broke through it, but we didn't close through it. So it's important that price closes through this level. And if in this instance where price has failed to close through it, I'll move this level up to be adjusted to the high of the candle that failed to break through. And that will be the new level I'll need a close through. So you can see again, price just missed it. And then on this candle here, you can see it just slightly closed through that high. So now that we've made a new high, a new close through that level, I'll look to move my stop, and I'll make this line in red a pip below the candle that closes through that level. So we'll draw a line there, and that's where my trailed stop would go. So my stop, I now no longer have a 1R risk. I actually am now in profit. So I've locked in 0.67R in profit. And then basically once that first initial level has been closed through, every time price continues to close at a new high, I will continue to trail my stop below the low of the candle that closes through. So you can see the very next candle, we had another close through. So price and my trailed stop would be moved. Oops, let me just retry this. Move this stop up to below the low of that candle, which is this one here at 18 o'clock. And then basically price didn't make a new close before it hit my initial targets at 20 o'clock or 8 p.m. on that day. So that's exactly how I manage my positions. And let's just show you what it can actually do and the effect of managing your positions this way can have on your profitability. So if I just go over here, this is my testing data for my engulfing testing. And let's just have a look at the difference between with and without trade management. So basically, if I wasn't to trail my stops the way I do, what would my results be? And if I do trail my stops the way I do, what are my results? So with trade management, I returned 102.11R on this strategy, whereas without trade management, 98.26R. So that's really not a big difference in R between it, but where the difference is made is in your maximum drawdown. So maximum drawdown is defined between the high and low, or the highest point to the low point in a particular equity curve. So say if you're returning, obviously making profits. What's the difference between the highest point to basically a drawdown and the lowest point along the equity curve? So when the curve swings and, normally your equity curve and the way you make profits won't just be continually up all the time. It's going to have bumps and holes on the road. So it's important to understand exactly at what particular point will your account be drawn down on and what's the maximum that it will be drawn down on this time. So if you look at the difference between your trade management, so here you can see the maximum drawdown is 14.89%. I typically like my maximum drawdowns to be less than 20%, so meaning that I won't be down more than 20% at a given time throughout the time that I trade. So 14.89% with the trade management and the way that I showed you how I manage my trades on the example before. And if we go across to without trade management, so this is just taking the trades on face value, so just initial stops, initial targets, what the difference is. And like I mentioned, the peak equity, most money that the account would generate during the testing period of 5 years for this strategy isn't really any different. It's $1,500-$1,600 between with and without. But if you look at the maximum drawdown percentage, 29.42%. It's basically, it's actually just on double pretty much of what the maximum drawdown is for the trading system with trade management. So although the profits may not be different, the drawdown is significantly different, and having the drawdown of nearly 30% is definitely going to have an impact on your emotions, and not something that I'd be really interested in doing. Even if this number here for the peak equity was, another, say if that was 30,000 and it was more than with the trade management, I still think I would use the trade management because I wouldn't want my account to be drawn down 30% at any given time. And this is the importance of understanding and testing different variables within your system. It's important to see what changes to the system can impact the profitability and the maximum drawdown and risk of that system. Like I always say, you should really think of yourself as a risk manager rather than a trader, and you want to be making sure that you can minimize your risk on every trade and ensure that you can make steady profits along the way. Now, I don't expect to make 13% every month. It's definitely out of the ordinary, and I'm quite surprised I did given the month that it happened. It occurred in being August, because typically during the US and European summer, the markets will quieten down. And the reason behind this is because the institutional traders will typically go on their European holidays, jet setting around the world, and aren't looking at their charts actively every day. So there's going to be less volume in the market. And if there's less volume, the way that I trade, typically there's going to be less trades to be involved in. So typically these type of months between June to August are the most quietest I have for the year. But July and August have been some of my best months I've had along my entire trading journey. For the last 3 months, I've actually returned nearly 25% on my trading account. So I started off the year basically flatlining for the first 5-6 months, and then the last 2 months I've made a 25% return. And I typically look to average around the 3 to 4% return per month. That's pretty steady, and that's what I've been able to consistently achieve. So returning a 13% return is definitely something out of the ordinary, and something I don't be expecting to take in the month of September. Alrighty guys, so that's a bit of background in regards to how I was able to achieve a 12.97% return for the month. It's just showing you through an example of what type of trades I take, how I get involved in the market. I will start to release some more videos in regards to how I actually trade. I have also released one on my TikTok, which I'll send the link in the bio down below, to a different strategy I take on shooting star candles. I've got a little video summary of exactly how I get involved into those trades as well. But basically I just take daily biases, and I want to start running you through some more examples of exactly how I enter the markets and how I take profits out of the markets. So thank you so much for tuning in. If you did enjoy the video, please make sure you subscribe, smash that like button. If you've got any questions on the strategy or you want to know more, make sure you comment down below. Thank you so much, guys. I look forward to seeing you next time.